My CPA. He's going to share with you some things about taxes, kind of keep you out of trouble. We were talking the other day, and what we talked about was the fact that it's better to learn how to do these things right today and take care of them than it is to come back and, well, cover them with Band-Aid, and then have this big gauge and sewer that you end up having to pay a lot more money. So with that, I'd like to introduce to you guys Chris Johnson. Give him a round of applause. I'm going to get this one out of the way, Chris. Okay?
Yep.
Take up, go for it.
Can you guys hear me okay? Whoa. Can you guys hear me okay? Good morning, everybody. I'm very grateful to be here today with you. I hope the seminar is going well. Yes? It looks like you have several great sessions coming up later this afternoon. I hope that after my presentation that some of the information that I'm able to share with you, you'll be able to add to those sessions later on, and it'll hopefully help you make better decisions in your business, specifically in the administration in my part, going forward, and hopefully keep you out of trouble. You're probably wondering why my first slide is a business card, my business card with a lot of doodles. I thought this was a creative way to communicate to you that we are creative. We're creative CPAs. We're not your typical CPAs that you would find in the Denver area. My son, who's 5 years old, likes to come to my office, pull the business cards, take out all my pens, and draw. And typically, I like to throw those away when we leave. But this year, because of my presentation, I felt this was just a creative way to share this with you guys. So I like how he tried to spell Texas. I got to do a better job of teaching him how to do that. So, but I like the little caveman-looking guy with the dinosaur. Very creative. I also like to share, when I present, just a picture of my family. This is my wife, Amber, going on 13 years this year. Our two boys, Preston and Samuel is my doodler. And then I also like to share a picture of my work family. I have been with the Werner Group now for 13 years. I've been practicing for 18. I've pretty much been working with this entire group the entire 13 years. So definitely have created a bond and a special relationship with each one. The tall gentleman in the center is Steve Werner. He's the managing partner. He's been managing the firm since 1960. I'm not quite sure how many years he was there before he took over, but we have been serving the Denver area for quite a long time. I know we're serving third and fourth generation clients right now. So with that, today's presentation, as the agenda says, is QuickBooks for Financial Organization. Before I get into the meat of my presentation, let me get an idea. Is there anyone here right now using QuickBooks? Okay, it's about what I expected. So for those who aren't using QuickBooks, are you using another program like Peachtree, Quicken, Excel, still doing paper and pencil? Okay. And that's typical for small businesses. Hopefully after today's presentation, again, you will have some additional information to consider that will make you think about reasons why you might want to, go to a software program. Does it have to be QuickBooks? I'm not a QuickBooks promoter. I will say this, 99% of our clientele use QuickBooks. So for CPAs, clients who use QuickBooks, we're going to be more familiar with that. We're going to be more efficient, more effective, and we're going to be able to add more value to your business as we're going forward. So I definitely recommend using that, and hopefully some examples that I will share will illustrate the importance of that. For those who, my next question I want to ask is, who is using a CPA? Is there anyone? Wow, I'm actually surprised that there's not that many. So everyone else, you're doing it yourself through TurboTax or something like that? What's that? Don't file? Let me just tell you, after this, hopefully you realize there's a risk in not filing. Okay, well that gives me an idea of my audience. So let me start out by saying what I think the value is that we bring as advisors, whether that be your attorney, whether it be me, your CPA, your financial advisor. Our goal, our overall goal, is to help keep money in your pocket over the long term. How do we keep the money in your pocket, and what can we do to utilize the skills and knowledge that we have to teach you how to operate and manage your business in the most efficient way? And so one of the things we do, and we'll collaborate with your attorney and other advisors that you have in your life, we help identify and manage the liability risks that you as business owners will face operating a business. We help train our clients and help them learn the best way to manage their resources, like their cash, even their time. We even help identify solutions to minimize expenses. After tax season, a lot of my time goes into training my clients on how to provide the information more efficiently to me so they can lower their fees. So we show them the work that we've done, how much time it took us to take care of that work, and how they can lower those fees. The bulk of our time is not putting numbers on a return. The bulk of our time actually goes into building the set of work papers to support the numbers that are going on the return. Has anyone ever been audited by the IRS? Yeah, was it fun? No. IRS audit is something we as CPAs, obviously, that's one of the ways how we evaluate how well we're doing is whether or not you're going to get audited or not. Are we preparing the returns? Do we have a set of work papers to support the numbers that we're putting on there? That all begins with what information you provide us. At the end of the day, IRS audits don't happen immediately. They happen a couple years down the road. And to go back 3 years, 2 years, whatever it is, and retrace, why did I put this number on there? That's a difficult task, and it ends up being more expensive to do it later than do it as you're processing the activity right now. So if our goal is to help preserve your wealth, what are the 3 main factors that help drain your wealth? Well, first is taxes, of course, and that's my expertise in that area. You've got federal and state and local taxes. Liability risks, I put lawsuits. I would add fines and penalties in there as well. And then you have, missed opportunities. And I will share more on that. So some things that I want to focus on. So one thing I wanted to point out, so the business environment is constantly changing, so is tax law. In order to stay on top of the changing environment, you need to be able to change as well. You need to have a record-keeping system that's going to allow you to keep track and categorize all your expenses so that you can not only evaluate how your business is doing, but so that you will be prepared to help support those numbers if there are ever any questions or inquiries that come up from the IRS. One example I like to share with people is several years ago we had a client that owned 5 animal hospitals in the Denver area. He used QuickBooks, but he wasn't very proficient in it. He definitely didn't take the time to hire a bookkeeper to manage or to record the transactions. From my recollection, there was a lot of work that we had to put into it to make sure that the numbers on the balance sheet made sense. We made sure cash tied out. We always had to make some crazy adjustment to get cash tied out. We had to make sure that, the loans tied to the loan statements, fixed assets actually tied to whatever the depreciation schedule said. And once we felt like we had everything done, then we could put numbers on a tax return. He was someone who obviously was concerned with costs, and he had to evaluate whether or not he wanted to use us or if he wanted to deal with the IRS directly. But he ended up getting an inquiry letter from the IRS, a very simple letter just asking maybe specific questions about the tax deductions they were reporting on the return. And rather than bring us into it immediately, he actually allowed them to come into his office, look at whatever it is, because he felt like, everything was good. He had nothing to hide. He wanted to just get it over with at the lowest cost he possibly could. And 2 weeks later, he ended up getting a bill for $250,000. Needless to say, he brought us in right away. Unfortunately, at that point, he had taken the process so far that now the only way we could help him is we had to go through an audit. But the IRS already had enough information. They didn't want to audit just that 1 year anymore. They now went back the next 3 years to audit the rest of his information. After they start that process, they provide you with an inquiry letter where they're asking for certain documents to support the numbers you put on the return. He was only able to produce maybe a handful of the documents to support the information on his return. He actually said that he lost a lot of his supporting invoices and documents through a flood. Now, he definitely had a lot of stuff going on. Who knows whether or not he really lost it or not, but he didn't have the information, so it was looking grim. One thing that he did right in this situation is he had an independent CPA who was looking at his books on an annual basis. Now, while he wasn't doing what he needed to do to be making the journal entries as he went along and keeping track of his records on his own. By the fact that we came in and what the efforts that we did to make sure his numbers, were right, we were able to get that tax bill from $250,000 to $50,000 with literally no support from him. If you would have actually kept track of his records, and if you would have actually taken the effort to maintain his QuickBooks file and keep track of this and actually try to improve and manage his business, who knows, we probably could have avoided an audit altogether. And so the learning lesson is be prepared. Make sure you take the time to either learn how to manage your business or evaluate the cost to say, I need to get someone in here to input this, a bookkeeper to keep track of this so that I can be prepared to respond if need to down the road. Another good reason for keeping your QuickBooks, we had a client this last year who, similar to a lot of you out there, always does it on pencil and paper. All we have to do is a tax return, so it's not a real big deal. He wouldn't give me his, how he added everything up. He'd just fill out the organizer. We put it on the return. But this year, he actually had developed his business to the point now he was ready to he wanted to own his own, storefront. And he needed to get a business loan. And in order to get that business loan, the bank was requesting 3 years of financial statements. He didn't have 3 years of financial statements. He had a tax return. That's it. So what did he do? His first path was to go to an outside consultant and see if they could help him with this process. I think they quoted him like $10,000 to do the financial statements and to get him set up on QuickBooks and all that. All the stuff that they were going to do. I don't know everything that they were going to do, but it was a very large number. He then came to me because he obviously wanted to buy this building, and I just asked him, well, what does the bankers need? And so he put me in contact with the bankers. We followed up and figured out what exactly do they need in order to get this loan processed. And luckily, they didn't need anything complicated. They just needed a simple financial statement. So from the tax returns, we were able to develop what you would already have if you were to use QuickBooks, develop a balance sheet and a profit and loss from his income tax statements. Now, obviously, this did add additional cost because this is something we had to go back 3 years and try to piece everything together, make sure the numbers were making sense, make sure cash was tying out, make sure the numbers were real numbers on the balance sheet. And so this is something that sometimes you don't foresee what the future is going to hold. But it's another reason why it's important to be prepared and to go ahead and start thinking about operating your business as a business. Let's see here. Some liability risks. The attorney later on may share more on this as well. Some liability risks. Does anyone here pay an independent contractor? Do you pay people to help you out in your business? Okay. One thing you'll probably hear more about is there's a liability risk. This is something the IRS is being more aggressive on, is misclassifying employees as independent contractors. Before you pay somebody as an independent contractor, make sure you have consulted with your advisors. This is mainly in the attorney realm, but CPAs, we help identify these possible issues as well. And you want to make sure you have the documentation and the support you need to defend treating somebody as an independent contractor, not an employee. Does everyone here have separate bank accounts for their businesses from their personal? I'm surprised to see still how many business QuickBooks accounts that I get where I'm seeing not only all the business expenses and business transactions through QuickBooks, but I'm also seeing expenses for home utilities, home insurance, landscaping, dry cleaners, where you can see that in their business QuickBooks file, they're not only expensing personal expenses, but business expenses. Not only does that add time in the preparation of a return and additional cost to try to organize all that, you're actually you're damaging your protection that you have in an LLC or an S Corp or a corporation that protects your personal assets from ever being taken if you're ever in a lawsuit. You have to run your business as a business, separate from your personal transactions. You want to make sure there's no commingling of expenses with business expenses. By doing that, you're putting yourself at risk and the chance of one day down the road having your wealth diminished more than it should.
I can hear you. As long as I don't use, put that down as an expense, I'm okay, right? If I use my business credit card to take my wife to dinner, as long as I do not put that down as an expense, I'm okay, right?
Well, it's going through your bank account. When an IRS audits your books, they're going to be asking for your bank statements. And so you're right. I typically don't advise clients to write personal expenses directly from the business account. If it's not business related, I prefer you take it out of the personal account. You can take money out of the business account and pay you personally, but whenever an IRS agent or whenever an attorney who's has a plaintiff who's going after you, and they're going to be looking at your bank statements to see, okay, did so-and-so ever have personal expenses being run through his business? As soon as you do that, you've pierced what they call the corporate veil, and you've subjected yourself to possible risk. I think in your line of work, you guys already have a lot of liability risks. And so people who could sue you, is that a high risk for you guys? Lawsuits? No? Well, it's something I thought of that I wanted to share with you, that I think it's important to make sure you're running your business like a business, and that's one way to protect you from that. Another item I wanted to share, a missed opportunity sometimes for small business owners. I had a client this year who just started their business where he comes to me and we're filing their tax return by April 15th. had a good year. He had netted about $70,000 or $80,000 this year, and he wanted to know what he could do to lower his tax bill more. And I showed him how he could take a deduction now by putting money into a SEP IRA or a solo 401k, take a deduction now on the return that we were filing on April 15th, get the tax benefit now, and we filed an extension to October 15th, which allowed him to manage his cash flow. So he had an additional 6 months to figure out how to get that money into his retirement plan and save on taxes. These are sometimes missed opportunities if you don't have a CPA. And so opportunity to save on some taxes and keep more money in your pocket and take a deduction for paying yourself. Another missed opportunity is a health savings account. Anyone here have a health savings account? A few of you? Health savings accounts are awesome tools. They can be used not only as for health and come out tax-free, but you also have the benefit of, if you have the cash flow available, of leaving that money in there, taking a tax deduction now, and then later on, years down the road, could be 20, 30 years down the road, finally reimbursing yourself for all those medical expenses you paid out of your pocket and get that money out tax-free during retirement. One thing I skipped here. Where are you? On the independent contractor one, the reason why I wanted to bring that up is I had a client who paid employees and paid independent contractors because they did different jobs. We weren't really aware of them doing this until this issue came up, but because business started slowing down, they had to let those people go. And one of the people they let go was a disgruntled employee. He was a little upset that he got let go. Now, why he received a W-2 and he also received a 1099, he wanted to make it rough for our client, so he filed a form to the IRS saying that they were not reporting him correctly as an employee. And while it could have been a very bad situation, it ended up costing, we had to redo the payroll reports. There was interest and penalties and additional payroll taxes that had to be done on that income. But it could have been a lot worse. It could have opened them up for audit. It could have been open, could have created a Department of Labor audit with the state of Colorado. So that's one thing that I wanted to point out. I take it from the hands that were raised earlier, is there anyone set up as an S-Corp? Two? A few of you? Good. So the benefits of an S-Corp, which some of you are already taking advantage of, and this is another missed opportunity, is self-employment taxes. Employment taxes are Social Security and Medicare. So for everyone who's not an S-Corp, you may already know this, you're paying federal taxes, you're paying state taxes, and then you're also paying Social Security and Medicare taxes. If you were in the 25% federal tax bracket, and you add the 5% state, and you figure in the 15% basically is what it is for Social Security and Medicare taxes, you're looking at basically for every dollar you make, you're paying in 45 cents in taxes. One way to kind of mitigate that expense is to set up as an S corporation. You definitely have to there's a lot of questions that have to be asked. They're definitely a little harder to operate, more restrictive, but there may be an opportunity to increase your cash flow by considering this. And the way it works and the benefit that you get from it is, let's say you're a company that's netting $60,000. So on that net $60,000, you're paying, if we use that example, and if you're in the 25% tax bracket, you're paying approximately 45 cents or so in taxes. The 15% that's self-employment taxes, by doing an S-Corp, you can say, no. Even though I netted $60,000, my salary that's my reasonable salary is only going to be $50,000. So just that $10,000 gap, you're looking at a $1,400 tax savings on the employment taxes. And you, depending on what your situation is, it may be beneficial to do that. It's something that you and your CPA should evaluate to see if the benefits outweigh the costs. So those are the three main areas, and that's what your advisors are trying to do. You know, we're trying to, every new client we get, we're trying to identify what areas you're at most risk at, and try to come up with ways in which we can help lower those drains on your wealth. And we're looking at not only how that affects the current year, we want to also evaluate that going forward into the future. The next slide I wanted to just use as an illustration. I know for most of you who do your own taxes, I know this is how you must feel. To be honest with you, I've been doing this for so long, I still feel this way with the tax law. The easy part is filling in your first name and your initials and your last name and your social security number, but you know, once you get past that, you know, knowing which deductions are 100% deductible, which ones are 50% deductible, which ones are, you know, not deductible at all, the expenses that you need to allocate. Are you taking business use of home? Are you taking advantage of all these things? Your mind starts spinning when you start going through all the law. And no wonder when you have a tax law that's growing the way it is. You know, back in 1913, you know, the tax law was 400 pages. By the end of 2013, it's almost 74,000 pages. I don't know how one person could ever know everything about the tax law. I have clients ask me a lot, you know, Chris, are you ever going to go out on your own? I will never go out on my own because of the liability risk. I know tax law is not going to get simple. Even though people talk about simplifying the tax code, there doesn't appear to be any real intentions to really simplify the tax code. And if it wasn't for the age of computers, I mean, if you look at between 1984 and 2004 and the internet, we wouldn't even have the tax law that we have. So there's great things that technology has brought to this world, but taxes is definitely one that has become more complicated because of technology. The point I'm trying to make with this is you need to have advisors in your life. There's a reason why you have advisors. There's a reason why you keep your QuickBooks file and you keep organized and you understand, how do you categorize it? How do you reconcile your cash at the end of the period? Do you have a CPA looking at it and making sure that the numbers at least once a year make sense and mean something? You'll end up preserving your wealth over the long run by doing so. The last slide I want to leave you with is just some additional services other than tax preparation that we provide. We have tax planning, we do bookkeeping and training. Again, I say a lot of the value that we add with people who do have QuickBooks is initially, when people start first getting on QuickBooks, they're not real familiar with it. We will train your bookkeeper so that they know what we need. They know what they're looking at. And I will show you as business owners how to evaluate whether or not your bookkeeper is a good bookkeeper and whether or not they're improving every year. Because after so many years, you should see the amount of adjustments that we have to make be like 1 or 2 maybe. And once you know that you're operating your business efficiently, then you know that not only you can support the numbers that are being put on the return if need be, but you know that you're paying the least amount of cost that you can to your CPA because that information is getting to us in the most efficient and effective way possible. I think there are 3 points that I really want to make sure that I have stressed and have properly conveyed today. Current business environment, taxes, in constant change. It's only getting more complicated. You need to have advisors in your corner helping you mitigate the possible drains on your wealth, and you need to have organized records and utilize a program. It doesn't have to be QuickBooks, but something to help you keep track of what your business is doing, the income and expenses that you're putting on the return. And I'm reminded of something that someone told me years ago. All successful businesses have great leaders at the helm, but behind every successful business leader are a team of great advisors. Great advisors will challenge you, they will hold you accountable, and they will introduce you to other advisors that you will need along the way. If you don't have an advisor like an attorney, a CPA, insurance agent, then you're basically risking your future wealth to chance. Really appreciate the opportunity to speak with you today. Any questions?
Can you talk a bit about how you show correctly the use of contractors? Because I had read where an individual. Can you talk a bit about how? It's on. Oh, it is. Can you talk a bit about the correct way to show use of contractors in process serving? Because I'd heard there was an individual in Pueblo that got audited and didn't turn out well. So is there like 5 key points where you don't have them come to the office every day, where you pay them a set amount for services, you don't pay them?
There are several questions that need to be asked, and how that relationship is defined, who is in control, who's giving the orders, as far as what tasks he needs to complete, how that task is completed. I have a feeling that you're going to learn more about this. This is something you're probably going to hear more about when, who is it, Laura the attorney, comes up. This is definitely an area where typically you will see attorneys helping you make sure, because there are legal documents that you want to have in your file to show and that defines what that relationship should be. Something that has been signed by that person acknowledging that he is an independent contractor. That's typically what we have a lot for our clients. We've had attorneys write up agreements that people sign, and we go through the checklist of questions that they need to make sure that they qualify for and that we can defend if ever questioned. Usually the biggest problem is with a disgruntled person, so if you can at least snip it right away, as soon as you start the relationship, where you have the documents in place, they understand what their role is, you have defined that role for them, and they know they're going to be filing their own return, they got to pay their own Social Security and Medicare taxes, they understand the consequences of that, and you have something signed that says that they acknowledge that, then you're doing what you need to start protecting yourself. Any more questions? Thank you.